when markets are overbought, you're typically closer to getting some type of corrective action. Could be very mild, but if markets are very overbought, particularly when they're well extended into overbought territory, you're likely sometimes better just to be a little bit patient. Let what positions you have work for you, and then look for those small corrective actions to add money into whatever position you want. Here's what you need to know before the bell this morning. Markets are overbought, and we can stay that way for a long time. And this is one of the issues that happens with markets is that, Lance, you said the markets were overbought, so I reduced my portfolio by a whole bunch because we're going to have a correction and the markets just kept going up. Yeah, that's what happens. It's being overbought is a function of momentum. And when there's a lot of momentum in the markets, that's going to drive asset prices higher. Now, even though the market is overbought, it doesn't mean that you're not going to get small corrections back to a support line at somewhere along the way. We tested the 20-day moving average. Coming out of the April correction, we tested the 20-day. We're working on that process again right now. So you have these small pullbacks, which tend to be buying opportunities more so than selling opportunities. But when markets overbought, they can stay overbought for a while. In fact, we've seen this, kind of before. In particular, if we go back and look at this period that we had really kind of from November through really kind of March of this year, the markets just stayed very overbought for a very long period of time. February, March, April, markets just stayed very overbought. Finally, you got that 5.5% correction. And, that worked off and alleviated a lot of that overbought condition. Now we're kind of back up into that game once again. And so this is why it's very important not to overreact and understand that just because markets are overbought, that doesn't mean the markets are not going to go up and go up higher. It's just something to pay attention to, is that when markets are overbought, you're typically closer to getting some type of corrective action. Could be very mild, right? But if markets are very overbought, particularly when they're well extended into overbought territory, you're likely sometimes better just to be a little bit patient. Let what positions you have work for you, and then look for those small corrective actions to add money into whatever position you want. And again, kind of a good example of this is NVIDIA. And we talked about this yesterday, is that NVIDIA had gotten very overbought and was having a correction. Stock was down 14% in basically 3 days. And then yesterday, it rallied about 7%. So again, you have these corrections, even in strong momentum stocks like NVIDIA, as an example. You're going to have these corrective actions that will give you a better opportunity to put the capital to work in those areas. But again, just because something's overbought also doesn't mean that it's going to crash. And so this is why it's important to always remember that markets that are driven by momentum, particularly in the short term, can remain overbought much longer than you think, can go higher and farther than you think, and can really frustrate you to a maximum degree. And this is where we start making mistakes. When the market frustrates us, this is where we make mistakes, right? I'm out, and the market just keeps going up. I've got to get in. And then we typically get in right around the peak of the market, and then you go through a correction. It's like, see, I was right. And now the market's going to crash. And so you get all back out again, and then we repeat this process. So again, don't try to fight momentum. Understand what momentum is, and understand that the market is driven by psychology everywhere, right? It's just a mass organism of millions of people trading stocks every day. And so when you try to make a decision that is contrary to everything else that's going on in the markets, your odds of being wrong are going to be dramatically higher, right? And so then that's not contrarian investing. That's being a contrarian investor is a bit different. But fighting the crowd in the short term, if you're a short-term trader, trying to fight that crowd in the short term, making a macro bet, is you're really kind of confusing durations of those theses. So just be very careful. This is how investors get themselves in trouble over time. That's what you need to know before the bell this morning.